And over the last 15 years, we've seen our capital markets deteriorate. And if we take a hard look at what's discouraging capital from coming to our markets, Exhibit A continues to be Sarbanes-Oxley. We have a recent SEC study that says that Sarbanes-Oxley compliance is the most often cited reason why companies are delisting, why they are choosing to list elsewhere. And we have this phenomenal drop-off in IPOs. As all of us well remember, in the 1990s, we played host to most of the IPOs around the globe. Here in the United States, this was the home of a majority of those IPOs. Today, it's 11%, and it is trending downward at a pretty fast clip. And if you want to do any research as to the answer why, Exhibit A again, Sarbanes-Oxley. So Mr. Fincher's new legislation, I think, goes some distance to helping reverse this trend by making those listings slightly less onerous. But given the urgency of this problem, I think we need a solution to it, and that's why I introduced the Small Business Access to Capital Act, which would exempt companies with a market cap of up to $1 billion from Section 404B of Sarbanes-Oxley. That was recommended by the President's Jobs Council. They're on board for this. And this approach would address a key component of the SEC study, which shows the long-term burden on small businesses is 7 times that imposed on large firms relative to their assets. We have overweighted this against small business. I very much support Mr. Fincher's legislation here today. I think it's needed. We need to move it, but we should follow up with consideration of the legislation that I have introduced. I would ask the committee to do that, and I would ask at the same time that the members take a look at some of the studies and the SEC studies that show that the cost of this legislation far outweighs its benefits to the investing public. We need to remedy this situation before the capital markets walk off from the United States overseas.